AMD just reported its Q1 2026 earnings, and the numbers deserve your full attention. Revenue came in at $10.3 billion for the quarter, up 38% year over year. The data center segment hit roughly $5.8 billion, up 57% from the same period last year. Earnings per share came in at $1.37, beating estimates of $1.25. Just one day after the print, shares jumped over 16% in extended trading. What's more, CEO Lisa Su said,
"We are well positioned to grow data center segment revenue by more than 60% annually over the next 3 to 5 years and scale our AI business to tens of billions in annual revenue in 2027.
But what do the numbers actually mean? Today, we're breaking down whether AMD has actually closed the gap with Nvidia, what the valuation numbers really say, and which of the two is the smarter buy right now. My name is Phoebe, and you're watching Trading Key. Can AMD go up against Nvidia? We can't talk about AMD without first looking at Nvidia. It holds roughly 80% of the AI accelerator market in 2026, and its data center revenue hit $193.7 billion last fiscal year. Meanwhile, AMD's was about $16.6 billion. The gap here isn't close, and the bigger reason that gap persists isn't hardware specs, but software. Nvidia's CUDA platform has been the default programming environment for AI workloads for over a decade. Most AI researchers, model developers, and engineering teams have built their entire workflow on top of it. Moving to AMD's ROCm platform isn't a simple switch. It means rewriting code, retraining teams, and absorbing real risk in production systems where downtime costs money. That kind of lock-in takes years to undo, not quarters. On top of that, Nvidia just reclaimed its $5 trillion market cap, and the hyperscalers, Microsoft, Meta, Amazon, Google, I have collectively committed over $650 billion in AI infrastructure spending in 2026 alone. Most of that is going to Nvidia hardware, so that's what AMD is trying to compete against. Now let's look at whether it's actually making progress. Why AMD costs more than Nvidia on paper? Here's the part that trips most investors up. Let's pull up the forward price-to-earnings ratio. AMD trades at roughly 30 times forward earnings, while Nvidia trades at roughly 23 times. Wait, why does the smaller company with less revenue and lower market share cost more on a valuation basis than the market leader? That sounds wrong. But the logic behind it is pretty straightforward. Nvidia is massive. Growing meaningfully off a $193 billion data center revenue base is harder than doing the same off a $15 billion base. The market is paying for AMD's room to run, not what it's already done. That's a reasonable bet, but it only holds if AMD's growth actually arrives on schedule. If the MI400 launch disappoints in the second half of 2026, or if Nvidia grabs more share through its next hardware cycle, that premium gets priced out quickly. AMD is getting credit today for results that haven't landed yet, but Nvidia isn't. What is AMD's real competitive edge? So, what's actually pushing AMD forward, and is it real? The biggest shift in the AI chip market right now is something called dual sourcing. Microsoft, Meta, Oracle, and OpenAI all run both Nvidia and AMD GPUs in production today. And get this, it's not a backup plan. When you're spending tens of billions per year on AI compute, putting 100% of your supply through a single vendor is a risk no CFO will sign off on. So, the biggest AI buyers in the world are deliberately running AMD alongside Nvidia, both to keep prices competitive and to protect themselves if Nvidia's supply gets tight. AMD is no longer the chip you buy when Nvidia is out of stock. It's a deliberate part of the infrastructure mix, and that's a demand shift that wouldn't reverse in the next quarter. On the hardware side, the MI300 chip series has real commercial traction. AMD's data center segment now accounts for roughly a third of its total business. The MI400 series launches in the second half of 2026, and Visible Alpha consensus puts AMD's total data center revenue at $28.7 billion for the full year, up 73% from last year. These aren't rounding error improvements. AMD has moved from an Nvidia alternative to a company the largest AI spenders in the world are specifically budgeting for. AMD versus Nvidia. Which is the smarter buy? Well, it depends on what you're trying to own. If you want a lower volatility play on the AI build-out, Nvidia is the cleaner choice. It has the software lock-in, the hyperscaler relationships, 80% market share, and despite all of that, it trades at a lower multiple than AMD. You're paying 23 times forward earnings for the dominant player in the most important hardware category of the decade. There's nothing wrong with that trade. If you want more upside with more risk attached, AMD is your go-to option. The dual sourcing shift isn't a short quarter trend. Plus, the MI400 is a real catalyst in the back half of 2026, and Lisa Su's revenue target for 2027 is a disclosed management objective with customer commitments behind it. The mistake is treating this as a head-to-head where one of them has to lose. The AI compute market is growing fast enough that both companies can keep expanding their revenues while holding roughly the same relative positions. So the real question is how much of that growth you want, and whether you're willing to carry AMD's delivery risk to get the higher end of the return. Now, tell me where you stand. Are you holding AMD, Nvidia, both, or neither? And what would it take to change your position? Let me know in the comments below. Thanks for joining me today. If you found this video helpful, remember to subscribe to Trading Key, give this video a like, and share it with a friend who might just benefit from learning this too. With that, I'll see you in the next one.